Welcome to the IMF Spring Meetings and IMF Today. On today's show, what's next for interest rates and debt? Over the past 2 years, central banks have raised interest rates significantly to combat post-pandemic inflation. So where are we now? Why are some countries feeling the pinch of higher rates when others are not? And how could decisions on debt pave the path ahead?
Making the right policy choices will define the future of the world economy.
After months of preparations, the 2024 Spring Meetings are finally here. Thousands of ministers, central bank governors and delegates from around the world are arriving at IMF headquarters here in Washington, D.C. to talk about the big issues facing the global community. Today began with the headline report at these meetings, the World Economic Outlook. Chief economist Pierre-Olivier Gouronchard said the global economy continues to show resilience, but predicted growth will be flat from this year to the next. And when it comes to inflation, there are encouraging trends, but we're not there yet.
Board policymakers should prioritize measures that help preserve or even enhance the resilience of the global economy. A key priority is to rebuild fiscal buffers, especially in an environment with high real interest rates, modest growth, and elevated debts.
Now, interest rates have been on everyone's minds for what feels like a long time now. Every country faces its own complicated choices. Joining me now to discuss how policymakers are addressing these challenges is Andrew Bailey, Governor of the Bank of England. Thank you so much for joining us. A very busy week for you, I'm sure. Do you believe at this point that it's safe to say that most economies will have a soft landing?
Well, I think we always want to see the landings before we judge them, but I think I would agree with the IMF forecast that I think we're seeing very encouraging signs. I think we're seeing resilience in activity in the world economy, but we're seeing disinflation. So, in the UK, we're disinflating at what I call full employment, but I see, strong evidence now that that process is working its way through. Our judgment with interest rates is how much do we need to see now to be confident of the process?
And when you look at what's happening with the Bank of England, in Europe, Federal Reserve, do you think we've reached a point now where interest rates are going to start to diverge?
I think the dynamics, and I think the IMF forecast makes this point, I think the dynamics of inflation are rather different between Europe, and I mean Europe geographically now,
right,
and the US. I think there's more demand-led inflation, probably pressure, and a bit more in demand-led inflation pressure in the US than we're seeing. So I think the inflation dynamics are different. We're still seeing the extension of the process of coming out of the big supply shocks that we had, the impact of the war, the impact of coming out of COVID.
And with the recent bout of inflation and the monetary policy response to it, it's created this sort of forecasting and communications challenge is probably underestimating it. What's it been like being at the centre of all of that?
Well,
We've been on the outside. What's it like inside?
It has been a challenge.
Yeah.
We just had a very, very important and fascinating report done by Ben Bernanke for us, which we published on Friday last week. And I think the first point he makes is, look, all forecasters were essentially in the same boat. So it's no surprise that the errors on all forecasts went up because these were huge unexpected shocks. But, and this is the reason I was so delighted that Ben Bernanke agreed to do this review for us, we learned things from this, and it's important we learn things, and we're certainly going to do that. And I think there's some things in our process that we've learned, probably some things that were there before that we'd managed to sort of, in a sense, live with in normal times that we're now going to change.
And obviously being here is about bringing everyone together, but the word that we hear around these halls so often is fragmentation, something that you have talked about. What, in your view, are the effects of fragmentation on inflation and on financial stability?
Well, I think fragmentation is a serious problem because we've seen supply shocks, big supply shocks, and I think a fragmented world economy is more susceptible to supply shocks. Now, I'm a very, very strong personal believer in free trade, but I recognise that the experiences we've had means that we need to diversify often our to get more resilience in our trade and in our international connections. But it doesn't mean we give up free trade.
Okay, a busy week for you, I'm sure.
Yes.
Andrew Bailey, thank you very much for joining us on IMF Today. We appreciate your time.
You're very welcome.
Thank you. Nations around the world are making gradual fiscal adjustments to try and get their economies back on track. And for many, curbing debt is a key focus. Sri Lanka is making progress, and I had a chance to speak with the State Minister of Finance, Shehan Semasinghe, about that this morning.
We are improving. Economy has shown great signs of stabilization, and the IMF program is bearing fruit now, has translated into results. If you go back to 2022, it was the most challenging year for Sri Lanka. The entire country was suffering with the economic crisis post-COVID-19 pandemic. Then in 2022, we reached the IMF to have a program. So from there onwards, we have been committed to the IMF program. And we also thank people of Sri Lanka for remaining resilient during these difficult times. But however, we are happy that we have recovered, but now we are moving towards growth. Mm-hmm. If you look at our numbers, we have moved towards growth after a contraction of 6 consecutive quarters. Right. So 2023, third quarter, we have shown a growth. Fourth quarter, we have shown a 4.5% growth. So that's a healthy sign in economic terms. And then the 2024 is going to be a good year for us. So yeah, we'll remain committed. That's the ambitions of the government. And we will continue with the macroeconomic stability which we have reached so far.
And tax is obviously a big part of the plan. Sri Lanka has some of the lowest taxes in the world, but your plan is to raise the state revenue to 15% of GDP by 2025. Tell me, how do you plan to get there?
Yes, we had the lowest tax revenues, one of the lowest tax revenues in the world. But when we embarked on the program, we have gradually increased our tax revenues. We have removed tax exemptions, and also the tax compliance have been strengthened. Digitization has been brought in, where I think successive governments tried for a long period, but most of the governments failed. So the tax revenues we have reached up to, the government revenue has gone up to 11% of the GDP in 2023. So that is from 8.1% of the government revenue. And in 2024, we expect the numbers to move to 12%. And we are confident that we will reach that figure. But there is additional measures being taken by the government, that is on digitization. Because we think the tax structure needs to be digitized. And with the recent initiatives we have taken, we have already had 130% growth in tax compliance, tax registration. So that's a good number, but we are not happy with it. We want everybody who should pay taxes to pay taxes. As I said earlier, we have removed exemptions. So there are no exemptions and there won't be revenue leakages. So we'll be extra cautious on getting the revenues up. In turn, that will help us to ensure welfare of the citizens.
And also, how would an increase in revenue put debt on a more sustainable path?
It's a good question because debt crisis was one of the main crises which led into the economic crisis. As of now, with the assistance of the IMF program, we have had negotiations with our bilateral creditors, which we have come into agreements in principle with the bilateral creditors, and we are now working on converting it to MOUs. As you know, we had a special official creditor committee, which was co-chaired by Japan, France, and India. China was sitting outside the official creditor committee, but we are happy that we reached agreements in principle with all our bilateral creditors. We are having engagements with commercial creditors and the private bondholders. So we are confident that we will reach a resolution which will enable Sri Lanka to be a debt sustainable country.
Minister, you've clearly got lots on your agenda this week. Thank you so much for your time.
Thank you very much.
These meetings also mark an important milestone in the IMF's journey to make its spring and annual meetings greener, a process that began 12 years ago. The managing director was on hand yesterday to celebrate the meeting's ISO certification as a sustainable event by the International Organisation for Standardisation and the British Standards Institute, making the IMF the only international financial institution to hold this distinction. Achieving ISO 2012-1 puts in place a system to reduce the Spring Meeting's environmental footprint and improve its social and economic impact. For example, the IMF is offsetting greenhouse gas emissions from participants' travel, improving energy efficiency and reducing food waste, among many other measures. Now, this afternoon, the first of our Climate Voices series will take place right behind me here in HQ1. The discussion series will showcase the IMF's work and collaboration with the World Bank and other institutions on climate issues. Today's talk focuses on lessons from Costa Rica and Kenya. This afternoon, we also have a high-level capacity development talk on unlocking domestic resources for development through global partnerships. And our first Governor Talk of the week, this one is with the Minister of Finance from Egypt. Then tomorrow morning, the day begins with the Fiscal Monitor press briefing, followed by a talk with the Governor of the Central Bank of Korea and the second of our Climate Voices events, asking what's next for climate finance. So we'll be back with you tomorrow, starting at 1 p.m, and we'll leave you today with some of the best images from the meetings so far.